Hey, it's Mac with PriceActionTradingSystem.com, and it is Monday. It is February the 8th. This will be our chart lesson for today, and we just had a range day today, and this is a fairly tight range. Um, it's only about, I think it's about 12 points, so it's not a very big range at all, and it is big enough to where you could get some trends from side to side, but we really didn't have a lot. We had this trend up early, and then we had another trend down. And then we just kind of went sideways into the 2 o'clock hour. We did have a little rally late in the afternoon, but this is all, most of this movement was after 2. So you can see even up to about right at 3 o'clock, we were still inside the range. And that's basically the overnight high and the overnight lows is what we traded in. Notice this move all the way back down. It wasn't surprising that we came back down here. Notice that I want to show you this just so you can kind of get an idea. For any of you that are asking how I had a good idea where prices were going this morning, notice this is where we closed on Friday. Or I'm sorry, this was the highest. Let me start this over. Between this line and this line is Friday's price action, and that was the high point of Friday. Well, when we opened up today during the regular session, it's right here where it turns white, and you can see that's that yellow line is the opening price at 8:30 for the daily or the pit be the pit prices in the daily on the daily chart. And so there's a gap. You won't have this overnight trading in here. So there's a gap between the high and where we opened this morning. And generally prices are going to fill that gap. And you can see we traded a little higher and then we came down. We filled that gap by a few ticks and then we rallied from there. And so that's how I knew there was a good chance we were coming back down. Once you start going down, you got to look at that as your first target. If you reach that one and when you continue, your next target will be these two closes. One of these is the pit close and one of them is the 24-hour close. So they're usually your next targets if prices continue lower. And then of course after that would be your next support from the previous day's trading, which would be down here. So that's how you kind of get those targets. Other than doing the measured moves as well, you definitely want to do the measured moves too. And most likely, I didn't measure this, but if you measure this leg here and you look for a measured leg, you can see you pretty much had it right there. And that also kind of measures back down to the lows. And so that was another thing. You had to figure you were coming to here first, then you're going to try to fill the gap, which I think we did both when we came back down to these lows here already. So because we went a little bit further, we actually went a little bit, the gap, I can't remember what this price was. Well, let's just do this. I can see what the high price is. Right here, the high was 38.88 and a quarter. And you can see when we came down here, we came all the way down to 38.87. So 5 ticks, we had 5 ticks to spare there. We actually overshot just filling the gap by about 5 ticks. So always use that to your advantage where you can. And then once we started back up right here on this leg, I would measure that one. Then look for a measured leg here. And they get you back up to the highs. Of course, we went continued higher, but that at least gives you a reasonable target back to the highs. Gives you reason to try to stay with that. And you can clearly see that two-legged correction. That's just a two-legged correction in the middle there. Leg up, two-legged correction, another leg up. You corrected a little bit and then continued higher. So that's kind of how I saw it today. But let's back out. We'll talk about the trades and we'll go from there. Not a lot of them today. It was kind of quiet. A lot of this, I mean, you can see how low the volatility is today. Much more normal kind of day. We've been getting late in the afternoon, and you can really see how the volume slows down from about lunchtime to 2 o'clock. There's just not much there. We got all of this between 8:30 and noon. And then from about noon to 2 o'clock, we just have this little bit right here. It's been doing that a lot lately. I've noticed that the last few trading days. Noticed it a few days last week. So doesn't mean there won't be trades because we had a few trades after lunch today, and not many even before lunch. There just weren't any good setups today, so just not a lot of price action. That's part of the problem. But let's back out. We'll go through the trades. Won't take long today. But we're clearly trading within the overnight highs and lows when 7 o'clock rolls around, which is right in here. And so we just came off these lows. You're still, notice how there's no real rejection off the lows down here. Even when we broke up, there's still no, it just kind of has to, it really struggles to get all the way back to the top. Turns out that part of the reasons we're in this really flat yellow channel working here, but you don't know that at this point here. So, but what you got a new low, you get a first entry, and you get a second entry. So when it broke higher here, that's a failure, and it's also a little breakout pullback long. I like that one, just because you figure prices are coming up here. We just came off the low of the range, so we're probably coming back to the high of the range. And this is giving you a setup with the trap. And I'm going to say this again, failures are a little more advanced. If you're not a really experienced chart reader, don't try to trade these, because you're just probably going to trip yourself up. Watch them, learn from them, try to spot them in real time, but concentrate on the basics of finding the trend channel or the range, and finding the entries we teach using the range rules, or either the second entries off the key entry points and things like that. That's what you need to concentrate on. And these are more advanced, these failures. And never fails. They're very powerful, but you got to know what you're doing to trade them. And what will happen is people see how powerful they are and they try to trade them, and then they're constantly emailing me, why this failed second entry fail? Well, if it failed, it wasn't a failed second entry. So, that's really all I can tell you. You just misread it. So you got trapped, basically. And that's another thing. If you try to trade these and you're not really good at them, you'll get trapped. And you don't want to be doing that. So concentrate on the basics if you're new to this. And when you get really good at reading the chart and understanding it, and you've been watching these, you'll start to see them in real time, and you'll understand them a lot more. And you won't have to ask me when they fail, why they failed. You'll know, because you can read the chart. And you'll know that it was a trap of some kind. So anyway, nice long there, and then you just had to sit and wait, and it was almost 8:40 before we got another trade. But notice we went in this real tight range across here. We had a little failed break lower here, no setup, failed breakout up here. There's a nice signal bar here, but there's just not much room here. And at this point, you don't know for sure if we're going to come back and confirm this trend channel or not. You could draw it off these lows, but you really need this point to kind of confirm it, that it's in play. So I don't think it's wise to go short right there, right into the EMA, right into this support right here, because we could touch it and bounce and go higher. It does push on through though, and you can clearly see there's a hidden second two legs. Notice we move down, back up, back down. So that's a hidden second entry. But you don't even need to be able to see that, because again, that's a little more advanced. But you don't need to be able to see that. You can clearly see it's a little failed breakout, and it does confirm this trend line. And so that's enough reason to go long right there. It's close to, it closes in its upper third, so it's a good signal bar. But another tick down, I'd probably say that signal bar didn't qualify either, but I think it does the way it looks. And we continue to move higher, and of course we get up here to the overnight highs and we find resistance. And if you're going to try to trade this, you need to wait on a lower high, a good setup on a lower high. And notice we made a higher high there, and then we made another higher high, and we're just kind of working sideways. You finally get a lower high right here, but it's right back into the resistance that may act as support. So plus the trend channel is still going. So I just don't think it's wise to enter right in the middle of that. We actually just got into another range, and this was the low side and this was the high side. And of course the midline was the overnight highs. So it's just not a good place to be entering right in the middle of there. You might take that. Notice that it's a first entry, and then you make a little matching high before. So that's a correction still. So it could be looked at as a failed second entry long, and it could be looked as a hidden second entry, because notice we go up, we go down, we go up, and then we turn down again. So there's a second entry in there if you go to a little smaller chart. So if you saw it like that, you might take that trade, but I'll be honest, I don't like it. I wouldn't take it. And you can clearly see there's two legs down, and then we correct. So I think you're better off to wait and see what's going to happen here, because there's not much room back to this trend line. And so the bias is still up here. Even though this has all the makings of possibly being a range, because we're probably going to come back and fill that gap that's down here, I still think you're better off to skip that one. And then look what happens. You fell out the bottom and you get a second entry long on a failed breakout way away from the EMA. When we look how close we've been and above it all this time, we're going to come back probably and at least test that breakout area, that EMA, probably the trend channel line, and maybe even try to make a new high. And that's exactly what happens. We get a couple of legs up to a new high and then it sails off. You don't really get a good chance to go short here, unfortunately. Unfortunately, you really don't get a short on my chart all the way down. I don't think you want to risk going short right here. Not a very good signal bar either. You get a lower high here. Again, not a very good signal bar. And you actually get a failed second entry long here. So when it breaks lower, you could have gone short right there. Notice there's a clear 2 legs down with a failed second entry long. So you might take that trade there when it actually doesn't, but it actually does. If it would have broke straight below that bar, I'd say, hey, maybe we take that. But when it ends up another inside bar and you got those 3, that's congestion. And it's real risky because it'll probably snap back. And sure enough, it does snap back before it goes lower. And you can't go lower there because you don't have a good signal bar. So this one is another one you could argue that, hey, if you want to be aggressive, maybe you take that failed second entry long. But you can clearly see how congestive that is all the way across. And we do drop on down. And like I said, unfortunately, you just don't get a good setup all the way down there. It's a shame. And maybe some of your chart looked a little better. If you had a good signal bar here, I wouldn't be afraid to go short. And if you had a good signal bar really bearish here, you might even go short right there. The only problem is this little short-term trend is still in play and you don't have a break of it yet. The key here is that you got a more dominant pattern is the big range. The yellow channel, you've already had a break and a new high. So there's some reasons to consider going short there. You just don't really get a good setup. But anyway, we come down here, we bounce. And again, you don't get a good setup. You get a first entry short right here, but not a very good signal bar. There's nothing down here that tells me, hey, even though I know we're probably coming back to the EMA, there's no setup here. This bar is, you could look at this as a signal bar, but prices never break above it. They drop down. Then you're going sideways, and this is not rejection. You want to see prices come up here. Notice how this came up and finally made that high and then sold straight off. That's rejection. Prices are still hanging around down here. You don't have true rejection. So just not a good place to buy. And of course, a first entry like that, no, I'm not buying it. And then finally, you come on up here and look how far away you are from the EMA again, and you got a new low right there. So a first entry and a second entry, pretty good signal bar. I like going short just to ride that back to the EMA on a second entry short. It ends up going lower. You don't get an entry on the lower high here, but now you got 2 legs back down, and look where you bounce. And again, you got some room back to the EMA. So I like going long again. Now this stuff in the middle, you got to be careful sometimes, but you can clearly see it wasn't real obvious here, but when you turn down there again, you've obviously got resistance here, and then when it bounced down here again, it's starting to look like a range. And so again, notice you get 2 legs up, but you don't get a signal bar. So if you had a good signal bar there, I'd say fine, go short again. We get a little break lower. This one's tempting, but notice there's just 2 inside bars. This does break lower, but it doesn't go very far. So I think you need a higher low or a reversal pattern, failed second entry short or something. And notice you bounce first entry, second entry. So this breaks lower. When it turns and goes out the other side, you got a failed second entry short. That's a failure. So you may take that one. I marked this green because the problem is you really need enough room to get out before that midline right there, in my opinion. Especially how sideways this is, because it's probably going to break out and turn back down. So I think you're better off to skip that one. But when it turned and broke out the other side, you could have gone long right there. And there's just enough ticks to get out. It's real close. I think the way you'd want to play this is when it turned down and turned up and broke higher, you might drop a limit order a couple of ticks in here, and if you could get filled that way, maybe you take that trade. Otherwise, I'd skip it. It never triggers up here anyway, so you wouldn't have gone a long way up here. It's too close to the highs. So the only way you might take that one is on the engulfing bar, breaks lower, turns up. But even then, with all that stacked up, I would have to see it break higher and drop a limit order along this support a little closer, and then try to get out. And that'd be the only way, because I think it would be only 5 ticks up. It'd be a 5 tick failure. In other words, you'd need one more tick and probably wouldn't have got out before it stopped you out, and then went exactly where you thought it would go. But when it comes back down here, now you got a little better signal bar with another drop lower with a little more room here. I like that one. A little better setup there, and it actually turns back down again, but it breaks higher first, and so you just end up kind of with more congestion there, and it's right in the middle of the range again. You want to be able to get in closer to the lows here. That one's too big to do that. This one's more like it. And again, it's not a perfect signal bar, but it meets our criteria. And that took us into 2 o'clock. I wouldn't, there's nothing over here that would excite me. Sometimes you might get a setup just after 2 that'd probably be okay to take. But I don't see anything else here today. So it's a really quiet day, not much going on. The volatility is very low. So we may be about to head back into the market slowing down and kind of getting back to normal. People, we'll have a day like this and I'll get 4 or 5 emails, people saying, what's wrong with the market? Why is it so slow? Well, this is not that slow. This is more of a normal day. We've just had such strong and high volatility the last year due to COVID and politics and all the craziness going on. It's just been a crazy year. And I honestly, I don't remember ever having that kind of volatility for a whole year. I've been trading a long time, and I just don't remember it ever being like that. Now we do get high volatile periods, but they usually last a couple of 3 weeks. A month would be a long time for volatility like that. So if you put that into perspective, it was almost a whole year of it. And we still slow down here and there like this for a day or two, and then the volatility comes back again. So I'm not convinced it's over yet. A lot still going on out there, a lot of craziness. Something could change or erupt at any time, and we could be right back where we started. So they keep talking about some new and more deadlier variants of COVID, and let's just hope that's not the case, and that maybe they're overblowing that, or it won't reach here. We can keep it under control, because COVID has been bad enough. I just can't imagine if we had a stronger variant of it that was worse than the first go round. So anyway, I'm going to wrap it up. We'll be back again to do it tomorrow. I'm done for today. This is Mac with PriceActionTradingSystem.com, and we'll see you next time.